My name is Pete.
And this is Lucas. Nice to meet you guys.
Cool. Hey, that's the first part of our series, Venture Building Like a Pro. And I start sharing the presentation. Could somebody confirm if you can see the presentation?
We can see it, but it's quite like a small format. So if you maybe make it into exactly. There we go.
Cool.
Now
Okay,
it's perfect.
let's get started. We have a super interesting 1 hour in front of us, now 57 minutes. Actually, Sacha, he turned sick yesterday evening. I hope he's getting better, so maybe he can see the recording. So get well soon, Sacha. No worries. I can take over the part of Sacha and also together with Lucas to tell a little bit about it. Regarding the presentation format, I do like it interactive, as Emma already said. So whenever you have questions, you might just drop in. My colleagues at Swiss Startup Association also will monitor any questions that are being dropped in the chat. So whenever you have a question and you don't want to break me or Lucas talking, so you can just put a question there and they can be sent to us. Let's get started. For everybody that's having lunch in the meantime, and good day. So the first series that we have, Tech Venture Building Like a Pro, is going to focus on the venture building journey and its 4 stages. I will make around 6 different stations into that presentation. The first one will be the introduction in tech venture building journey in general. We split that into 4 stages and we talk about every single specificality of all the stages. Then we will, with our approach that focus on product management and growth, deep into every specific stage and give some criteria and tips how to manage those the best way. And then we will show the journey of the last big venture we built, co-built together with our team there. It's Gigtech that's fueling Beyond Beauty Club. And then the last one will be a summarized actionable insight and strategies from the 38 ventures we built so far, so in the last almost 5 years. And then we're going to have this interactive Q&A and also a preview on the next series. Let me get started about what we're doing and how does it work. So as you already got, we are named Axelra, and we are a tech venture builder. It's like a factory building startups. It's also very similar to the terms company builder or startup studio you might have heard. Our slogan is that we accelerate tech venture at early stage for corporate and startup with skin in the game. I will come to the all essential parts why this is important. And for us, our approach is to really get traction quickly and being able to ship revenue generating MVPs after already 100 days. So that's a little bit the specificality. I'm coming a little bit from the consulting area. I had stages at Accenture, but also kind of incorporated together with a couple of friends the consulting company for uni customers. And this company has 250 people in 23 branches around the world, and they're really doing consulting. And I found out that having consulting or advisory is a really important thing, but in the end, it's all about execution. And here we do a lot of execution to show traction, which is important. To quickly give you an overview on what we did, we created or accelerated around 38, now it's around 40 different companies. As we said in the beginning, they are startups and corporates. We also need both of them. With corporates, you are able as a venture builder to earn some service revenue. The earning possibility with startups is super limited, as you can imagine. We do not outsource anything somewhere else in other countries, so we really have it on site because we need the speed. But we also earn then money, luckily maybe, if this is working over time, by kind of working against shares. This is also a term that we have skin in the game. So we work for 2 invoices. Sometimes it's one is really cash, but this is super limited. And then the second one is we change the shares into equity, and at one time we can also sell then the equity, and that's the game that you have as a venture builder, that you have aligned interests. So you're not interested primarily in charging the highest amount of service fees, but having aligned interest to build the company and be part of the success that this is going to be profitable. On the right-hand side, you will see the approach we have. We unite three different dimensions: product management and growth, as we discovered as well that we really need to cover all of them. I would not say that that's a holistic approach. We're on a journey also to become more complete in understanding and contributing to the ventures, but it needs much more than just tech execution or management, incorporation and growth. And in the end, you just become an entrepreneur as your peers and venture colleagues that you try to make it work. I said it in the beginning, there is a absolutely rise of venture builder, company builder, startup studios. There's also a study around, there are different waves of how they become popular. We are now in the third or fourth wave. In Switzerland, there are not so many company builder. The index or the list I'm familiar with has around 2,600 company builder. We are a specific company builder, specifically in the tech area, so tech ventures, so all the ventures that have a disruptive digital product service offering and also a business model. So this is unique, and in Switzerland there are not many that do that. Why you should go to a venture builder? There are a couple of reasons in terms of better economics and better chance of success. Actually, it's super simple. The return you have when you join on a venture builder is because they did it multiple times. You have a higher IRR, so interest rate. The other one is that the multiple of your valuations tend to be higher, significantly higher. And the last one is the time you would need from 0 to Series A is quicker. So it's de-risking and speeding up. That's actually the thing. We are happy to be announced now from Financial Times. They made the study out of over 2,000 startup hubs, and we were selected as #1 in Switzerland and number 32 in Europe. This is cool for us. We're not that large. It's nice, so we're very happy to do that. So now let's dive into that stages of that tech venture building journey. So everybody knows when you start a venture, you're probably super happy and very enthusiastic at the beginning, and then this reality sets in. And then this one is really followed by a lot of pain and hustling. And it's pretty hard to get that product market fit right, to be able to come to a point where you do start more money than you spend, invest or burn. And this specific journey is not just like here. So it's not this curve. It looks, of course, completely different. But we had, in experience and also in combination with the research we did, an opportunity to put that into a structured way to understand, okay, what kind of stages do we have there and how can we approach it? Before I jump to that, also some numbers about how many organizations are being built, startups incorporated, companies incorporated in Switzerland. And in total, we have around 55,000 startups incorporated every year in Switzerland, where in 2021, Zurich was really one of the hotspots. That does not mean that those are all tech startups, of course not, but you can see by the number of the organizations incorporated that learning how such a company needs to be built is super vital to survive. And I have the newest numbers from 2023. It's 51,637 new startups that are being incorporated, and also a lot of venture capital investments that flow into that. I will not go into deep that venture capital investment topic, but for the ones that are not that familiar with it, the numbers of investment increase in 2023, but decreased a lot by 2023. So the last number specifically in Zurich decreased by 59% in Q4 for venture capital investment. So it's really hard currently, and not doing the same mistake over and over would really help. So this is the little bit the story. I just mentioned it before. So it decreased to 2.5 billion, still a super high number. Importantly, that early stage ventures, so that's the term that we use for the ventures very at the beginning, that still works. The rounds still increased, but the problem is on the bridge rounds and later stage funding rounds. But still, it has been easier times 1-2 years ago for raising funds and to continue. And some statistics why those startups fail, it's from the percentage, it's most of the let's say probability goes into the timing and not really finding a need. And this is something that is super important. I would even say one of the most important thing. We do receive a lot of applications from the market who they want to build a startup together with us, and they most of the time do have an idea for a product, but no problem they solve, or no real problem they solve, or a problem that can be fixed with another solution that's much cheaper. And really finding out there's a problem and a need in the market, and then building the venture around it becomes so super important. And I cannot tell that enough, because we always come back to the point. And comparably to the world, Switzerland as a market has not so many problems that are unsolved and can only be fit by an idea. So we started to look really for problems. Before in management, we never looked for problems. We wanted to talk about solution, being positive and stuff like that. But here it's different. You really need to look and spend a sufficient amount about what's the problem really, and understand it. And then team, you're on a journey with people you hopefully met before, probably didn't. I do compare it sometimes with falling in love. If it's not so good having one night stands or breaking up or whatever it is, but it's a hard way, and you're gonna manage, as I displayed before, also really sleepless night and blood, sweat, sweat and tears. So you're not always having good times when starting a venture. It's also super nice, don't get me wrong, but it's the team constellation has a big impact. And if you see the team starting a venture and still being up and running after 2-3 years, that's a big difference. Not only because they might not find the funding, which you can see it's on the right-hand side, not really a big topic. Actually, in the end, it's, of course, if you run out of funding, you could have done better before, but mostly it's regarding this market need and teams. And now this 4 step on stages. So we try to perform those steps where we start, accelerate, and build up the team and hand over in 100 days. But this specific process, we should take a little bit, let's say, a look into that, because it should not be a miracle. It's every time something we learn, but they are super clear 4 stages. And let me start with that 4 fits and 4 stages. So there are 4 super important and basic fits every startup needs to master before they can go along. And it's important to solve that fit and get a proper answer as good as possible. If you're gonna jump that or don't do the job well, it's gonna cost you a lot of money later on. And let's start with that problem and the customer need. So the first one you really need to understand is customer need, problem, and really finding, quantifying, understanding a problem that's worth solving for a specific target group. Most of the people do the mistake here that they try to find the problem that's valid for humanity, but you're probably not going to build a solution at the first step for humanity. Also, if you're going to choose then the MVP approach, so you should be really specific for whom exactly. So what's the target group and what's really exactly the problem, that you do understand, okay, what's the problem for what kind of customer you try to fit. If you really find that problem, believe me, also your marketing costs decrease. Because if you need to tell later on everybody with a lot of marketing budget that they do have a problem and they don't have a problem, it's very expensive. The second one is the problem solution fit. It's where the product design kicks in, and also where you create an overlap from desirability to feasibility. Not with everything you do, it's just with the first approach you're kind of considering, but you do find out and get a validation from your target group customers, can be B2B, can be B2C, but it's very specific for them, that your solution, how you solve that problem, at least partially, does really solve the problem. And in our understanding, the best proof of the pudding is money. If you already got it at this point of time, that you find a couple of guys being crazy enough that they pay $9.90 per month for your really small scoped MVP, that's the best proof you can have. Because paying money for something to solve or release the pain is a super proof to continue. All the ventures trying to raise money never sold something, not really sufficiently speaking to customer at that point of time, telling to the investors that they're going to solve the problem. And later on, if they launch the MVP with a solution they didn't validate that generates millions and gazillions, that doesn't work. So it's really, first of all, problem, then product design. The next step is the product solution, or product or solution, depends a little bit what you do, market fit. So really go to market and pricing. This is where the viability kicks in. So you look for something that's desirable, that's feasible, and also viable. So überlebensfähig in German. Huh? So you build an MVP, you ship that, you also prove that you're able to ship with your team, and you sell your solution to the market as a product and service. And maybe you feel ashamed a little bit for that product, then it's exactly right. Then you're early enough.
Actually,
you should. That's correct. If you not feel ashamed, you wait too long.
Yes.
And you need to think about so many things to make a product viable, generate the first revenue, credit card, incorporating of the organization, having an invoice number, an address data. So all the things you might not think about, but that's super important to have that at the beginning. And only if you perform first the desirability, the feasibility, and the viability, you should start to worry about scaling. Can you scale that trilogy of viability, desirability, and feasibility, and to what kind of cost you could do that? And while scaling, you should pay attention to quality. But it's important to worry about scalability the most in stage 4. So it doesn't make sense to spend too much or to overthink the scalability problem in stage 1, right? Or also for the go-to-market pricing, you also don't need to become profitable in go-to-market and pricing. So in step 3, that's not the point of step 3. You need to demonstrate traction, onboard the first customers, and really show that this is working. So now, those 4 steps are essential. So you need to master them. And there is some methods and also some methodology we created, how we have approached it, because it's actually always the same. They always go through all of those 4 steps. And this is the overview we created with the guys with a mobile phone. You need to check that slide later on. It's slide number 19. That's everything we know condensed in one slide. So it does show you on one hand side the 4 stages. So ideate, validate, launch, and scale until to the point you become profitable. On the other hand, it gives you a description about the fit and its description what to do. And we also added some measurement regarding what is our perspective on revenue, profit, and valuation in every step, and also how much money you would need, ideally, typically in Switzerland, to build such a tech venture. And you also see the part, we call it the wilderness, because ramping up, building, launching, and coming to the point where such a venture earns more money than you spend, so you're having a positive cash flow, costs around 0.75 to 5 million Swiss francs for a tech venture if you really build technical IP. That does not correlate or is not true if you build, for example, an e-commerce shop or do a consulting business. That's a different thing because you have a different cost structure. But if you have, tech, delivery, IP, rights, some stuff that investors also would pay higher valuations. So, and you could also see that reaching this point is really important, because you will have as well a different point of investors already joining you. Because if you don't have a product launched without having the demonstration possibility to show that we are generating the first revenues, your valuation will be way lower. And you need to give away too much shares of your company, because investors, especially large VCs, they normally tend to the point that they say, yeah, once you have a lot of annual recurring revenue and you start to just before hitting profitability, we give you money for scaling because it's de-risked. But the risk at the beginning is actually much higher.
Too high, yes.
But on the other hand, also valuations will be much lower. So the play from a venture builder is being at the early stage area. So that's before they become profitable. And then the scale up phase for us is on the later stage after they hit profitability and positive cash flow, at least for a couple of days. Okay, so those are the 4 stages. Now let's dive into the topic about product management and growth for each of those stages. So when you build such a venture, you need to be able to perform different aspects and unite the capabilities of different aspects about product and service design, about managing projects, building a company, accelerating growth. And there are many methods you might have heard or did course about: design thinking, Google Sprints, Agile, Blitzscaling Canvas, Pirate Funnel, whatever it is. So we try to unite that in one model, which we simplified because it's super important to reach quickly bottom line results. If you just do it super complicated and you fill 1,000 templates, you created a lot of paperwork, but not really no results. So when you execute such ventures, you will have a multi-dimensional problem to solve with only super limited capability and a lot of unknown pitfalls you might never have experienced, from tax regulation to development, from architect to sales, from whatever it is, and you just need to get it done somehow. So it needs to be pragmatic in a way. And what we try to do here is now really focus on those different stages to give you a little bit an idea. So let's talk about the first stage. I also indicated on the top left-hand corner. So it's the first stage, ideation. You should start with the problem, spend more time with understanding the problem, especially target group, severity of the problem, alternative painkillers, and less with the solution. You really not matter about the solution at the beginning. You want to understand the problem. That's also a quote from Bill Gates and Elon Musk. They spend 80% with understanding the problem and only 20% with creating the solution. I know it's very tempting to jump into the solution, but you should really do that. Valuation-wise, if you come with a problem that's not worth a lot, and you probably need around 50K to bootstrap this or work with a co-founder and organize the money from friends and family, but you could actually use scribbles or slides or just the back of the napkin discussion where you draw stuff with a lot of possible future customers in your target group. So you should really spend and understand and note and list and do and use some simple visualization techniques. It's also fine if you try to craft one slide that should summarize your super idea, or even a drawing like a doodle from a kid, but you should really focus on that problem. So that's the first step. In the second step, that changed. So now you should start to work on a solution that show how you can solve part of that problem. And you should also get a validation from that. Our ideal customer profile would be always, okay, spend a couple of francs on that. If you have to do with a lot of B2B customers, something that hurts is also a committed 1-hour session in the next months with the board or the CEO. That's also a commitment. They cannot make you that easy, but if they write you and say, okay, look, we like it and we're going to invest 1 hour with our board, that's also a good commitment compared to 990. But you need to find something where they commit. You should start to generate some revenue with, can be 1,000 francs, 2,000 francs, but then the valuation starts to increase, and you can start to craft the pitch deck as well. So in terms of product, you can create a pre-MVP, an interactive prototype to showcase the solution, how this at least partially solves the problem. Can be low code, can be a working pre-MVP. You're anyway going to throw most of that one away. So it's also not clever to then say stuff like, so yeah, let's also build for the pre-MVP the foundation where we build on the MVP on technological perspective. That doesn't make sense. It's quick and dirty. We did valuations with Wix.com. We did it by just coding with a student. We did it also complicated. It depends really on the case, but you should be able by end of this validation where you get the proof, compile a pitch deck that covers the problem, the solution, the size of the market, the competition. So what other competitors they are, how you position yourself, the idea of your product, a business case showing the cost structure and the revenue structures, having for the most important competitors a deep dive and get a clear idea on how you want to fundraise that. Because in stage 2, you need to raise the money in order to be able in the next phase to build the MVP. And if the MVP is going to cost you 300 to 700K, you need to have enough good shooting power in that pitch deck that somebody is believing you that's a real cool thing, and they're going to give you, let's say, 500K, and you don't lose half of the company. So that's the important here. In stage 3, where we talk about the launch, here it's really about building and shipping the MVP. That MVP should start to generate revenue, ideally around 100K in the end after you launched it. And you should also incorporate the organization. One thing that's clear for everybody who already raised, so normally you need to have an incorporated organization, because if you don't have an incorporated juridical body, you cannot sell shares, right? And the IP also needs to be somewhere. So it does make sense to have the company incorporated. You need to think about stuff like the enterprise share option plan. That's an instrument how you can also let your first employee participate. There are different ways to do that, also with different legal and tax implications. You should even refine your pitch deck, because at the end of this phase, you need again to raise money, because probably you're not at the point where you already earn more than before. And the pricing, you need to experiment with it, but you should not worry about profitability in that step. So it can't be a goal to cover with the 100K revenue, do all the cost you have in your organization. You're still growing, you're still learning. That needs to be clear. But if investors see that you have traction with a couple of 100,000 or 70,000 Swiss francs, you have a much better situation to decide. You should also, in terms of growth, demonstrate traction by closing and delivering sales. So you also need to ramp up sales. If you have commitments, you can do POCs, you can onboard more customer, you can demonstrate how your monthly recurring revenue or annual recurring revenue is increasing. That's an important signal, KPI wise, for the investors. And you should start experience with growth hacking. It doesn't matter if you go for inbound, outbound, viral, influencer, referral, a combination out of it. You should start experiment what works for your target group well, that you can onboard more of your target group, and it can continue. And the last one for launch, here is now really the thing about scaling up. You need to come to the point where you do earn more than you spend, right? And here the customer acquisition cost, so how much does it cost for you marketing sales wise to win a new customer? And customer is not only downloaded the app, but you need to start earning money with that customer. And on the other hand, what's your customer lifetime value? That's a term describing on how much can you generate revenue over the lifetime with such a customer. So here this customer acquisition cost and customer lifetime value becomes super important. I see a lot of business cases exactly in this stage. They want to raise money for that scale or later on phase, and they do not know the customer acquisition cost and the CLTVs. That's a really bad sign. So you should also dig into that numbers to understand that. Product wise, you should come now closer to release 1.0. That's something, a term that when we think you have a stable version of the main features of your products, and now it makes sense to scale up. You will anyway pivot a lot during that case, but being confident that this is what you're doing now with the revenue you're generating here, now with that you want to scale. And in terms of management, you should understand your marginal costs. So investors do understand, okay, by putting more money in, this is how it's going to be reflected on growth. And then on the growth is just trying to reach that point where you start to earn more money. And I do not want to disappoint you, but if you manage to cross stage 4 and earning into the phase of profitability, you did a very good job. So the probability, as we had at the beginning, for startups, around 10% of the 5 years are still on the market. So the probability that this would not be successful is pretty high. But also, if it starts to work, it's going to be super nice. And it also needs time to get there. It also needs time. Okay, doke. Any questions up to now?
Let's see. I just wrote in the chat that people can also always leave it in the chat if so. Let's see if something rolls in. If I find anything in the chat, maybe I will take the opportunity and break in when you're talking, and I will leave you to continue with the presentation, and I will just wave at you guys.
Okay, good.
Perfect.
So let's continue. Let's jump into an example. The example I want to state here is a venture, a joint venture we helped to build together with a team there. The company is so-called Gigtech. It's the company behind Beyond Beauty Club. So Gigtech is fueling Beyond Beauty Tech. And the idea of that venture is disrupting social selling and providing personalized opportunities. It's in the beauty sector. So it's a beauty tech company. And it's the last case we did that was also the biggest case so far, right?
Yes.
So we delivered more than 2,000 or 3,000 person days with a team of 25 people from our side, helping to jointly build up another organization with 50 people now working there in different countries. And on the product side, we will deepen a little bit on what it is on the management side with incorporation, with plans, with hiring, and also growth-wise, we went live in 28 countries for shipping, but then in every new country we launched, new resellers could join, and now they are onboarding every month or every 2 months, 2 new countries, so they're massively growing. We helped to build it up and handed it over to the team by end of the year. So our last day was on the 23rd of December. You can see on the picture on the top, Shari, she's smiling, so she's the CEO. We had also moments where we were not smiling with the whole team. I can guarantee you there was a lot of work involved as well, but we had a really nice collaboration here. And I wanted to show you a little bit the journey that we went through exactly with that model. At the beginning, of course, doing scribbles, trying to iterate, validate with customers. At the second point, trying to get a lot of already customer on board on the app before we started. So kind of fix or hack the market before, also starting to jointly recruit the team, and then launch at the beginning in UK, scale to Ireland, and now for every new country, the organization itself is performing the scaling very, very nicely, actually. You can see here some of the pictures involved. By the way, there are many people not on that screen. One important guy to that story is the guy on the left-hand corner in the top. That's Simon Urian. And Simon Urian, he's the Beverly Hills doctor #1, the biggest Instagram beauty doctor. He's also managing Kylie Jenner, the Kim Kardashian, stuff like that. And the overall concept works like that. So Simon is super busy. If you want to have an appointment in his clinic in Beverly Hills, you would need to wait 6 months, and then the 10 minutes cost something like $800, and people are really queuing. And one Swiss investor, he made a company together with Simon and Shari. So those are the 3 co-founders. So they built that up, and they wanted to bring Simon into digital life. And Simon should use his 25 years of experience, put it into an AI, and then with a picture you make from your skin, from your face, Simon's experience should analyze all your skin concerns and then provide a personalized skin routine with up to 6 for you personalized, and also even your name is written on the product, and you're gonna buy that as a subscription, and this is really made for you. And then on one hand side you can consume that, and if you also want to bring other people to that, you can receive a code by signing up as somebody who's also selling that. And what you're actually selling is not the competence or stuff. So the only thing is you sharing your personal code with some potential future customer, and then Simon does the whole consultation with all his knowledge. So there's also no possibility that you try to invent some USP that does not exist or something like that. And they wanted to have Simon being a 3D avatar and looks really like he's looking if he would be in front of you. They wanted to have real-time payouts. They want to have an AI and personalized product. And we made that somehow happen, and we will show you how it works. First of all, brand-wise, there was a company before. It was called Simon Urian MD. They do still exist. They had already launched only a few of the products. They were not personalized, but they had all the FDA approvals for this MDO, exactly. And they also wanted to be in that topic of Beverly Hills. And we then started to take that huge project and put it into different parts. We call it slicing into elephants, because it was not slicing into slices of an elephant, because we had many elephants. It was really a huge project. And then we started to do an estimation on that, and then we came up with, okay, to build it, it's around 4,500 person days, and then to run it, it's another 4,500 person days, and how we can accelerate. So we kicked in at the beginning, and in parallel we started to build up the company and helped with recruiting and build an own tech team. But also the Beyond Beauty Club and Gigtech, they also started to do recruiting, so to have a complete team on that. And then we put all those components into our our model, product management and growth, because there is a lot to do actually in venture building. It's not only building those digital channels, but as well the incorporation, the warehouse, then the personalization process, the marketing campaigns, the academy, the referral system. So there is actually a lot of to do. And we crafted the first plan. And of course, this plan gets revised many times. And we were changing the scope as it is normal during such a project. And we managed then in the end to launch it. So the MVP alpha went live in December, the beta in February, we had a silent go live in June, and then in UK. And then already in September, we had 7,000 active club members that have been onboarded. I mean, it's KYC compatible onboarding. We had over 20,000 virtual skin consultation, the 28 EU nations. And then in December, Ireland went live. And then since then, so they're really adding a lot of countries and being successful in having that. And we also had it over. So now I want to quickly dig into every part quickly. And for the first part of the product, I would like to hand over to Lucas.
Yes, I realized preparing this slide actually is kind of difficult to summarize the whole journey on the product side within one slide. So let me break it down for you. We have, like as Peach said before, two major dimensions. On the one hand, we have the global e-commerce under the name Simon Urian MD, which with Simon Avatar uses AI to get actually we have a video. Yeah, it's a very photorealistic avatar. You can see it here.
That's an avatar, huh?
I mean, I guarantee you can't tell the difference. It's really awesome.
Also his voice. So we had a team going there, digitizing him. And now we can let him speak in Chinese and everything. And we're using also for Academy.
Yeah, and the journey, it's basically the following. You start a skin consultation together with Dr. Simon's avatar, and through AI, you take a selfie of yourself. Our engine analyzes the selfie. It identifies the primary skin concerns. In this case, could be like wrinkles or redness or whatever it is. And based on the concerns, you get a personalized recommendation of a 3-step skincare regimen, which you can also personalize with your name. So you basically get a subscription, as Peach said before, and then with a 3D printer, we print your name on the products. You really get this feeling of personalization. To go even further, we also, within the process, you can also download a detailed skin report. And to just empower everything, we created a very sophisticated referral system, which is then in the app itself. So the app, it's like for our ambassadors, it's like having a virtual office in their pocket. So they can download the app. They don't have any sign-up fees. Then there is no investment required from their side. They have a lot of gamification going on. They understand very quickly what's the best action they can perform. They have the academy where they can, educate themselves, understand how social selling works. They can empower themselves because it's a female community at the end of the day that come together to learn and grow. And everything it's real time, so you can have real-time payouts. You get instant push notifications when someone joins your crew. You can visualize your crew analytics, follow your leads, and everything is within one app. I definitely recommend you to check it out.
Cool. So you can see on the product side, there was a lot to do, but also on the management side. So having this referral system showing who's being connected to whom, what the payments do look like. Even here, Sacha, the personalization process where every product that gets personalized for you even has your name on it, and in building the team in the shipping center with the printer machine, selecting the right technology that this fits on that packaging.
Yeah. You can see Sacha having a lot of fun in our logistics center.
Was very cool. It was very cool. And also here the building, the recruiting, the country launches. So it's multi-dimensional, right? To build that, but give you a little bit an idea. And now, before we jump into our interactive Q&A, we would just quickly give you an idea on what is important on those 4 different stages in the ideation. And you might do the product.
Yes, I will start with the product one. I mean, we can't stress this enough out. It's really important to have a problem before having a solution. So you should really talk to real customer, understand their pain. I mean, maybe it's also a problem that you are suffering, but it's really important to understand if it's a real problem also for your potential customer, right? And it's important also to don't over-engineer stuff within this phase. So at the end of the day, you don't want to create like a clickable prototype with 50 slides, with swim lanes and workflows. It's like you should really focus on the essentials.
Regarding management, right? So 1 slide, pitch deck, payment is super important. And another tip, be very careful with selecting co-founders. You might start an agreement with them normally. And then what's also a nice growth method is writing a future press release about your venture. So why did it become successful? That's a painful process of doing it, but it helps a lot. Look for workshop in the industry. So not think about the industry and being around it. So be part or in the industry, spend a lot of time there. And then registrate your name. For validation,
it's important also on a technical point of view to select the MVP scope you wanna deliver. It's important to focus on revenue generating features at the beginning and not just like trying to have a wish list of features, because at the end of the day you won't have the time and eventually the budget to do so. In this case, it's also important to validate your prototype. So if you want to have a beautiful prototype that you might use in a pitch deck, it's definitely fine. But also keep in mind you need to have a plan for pricing, because at the end of the day it's part of the process itself.
This pricing information,
Yeah.
I know it hurts, but it's important. Here, if you found a co-founder, it's a good place also to sign a co-founder term sheet. Wingman Ventures and others, they already provide a free version of such a co-founder's term sheet. It makes sense. It clarifies a lot of things you might not deal with explicitly, and it makes sense to talk about it and start to sign it. And for growth, build customer relations, create waiting list, trying to have the first couple of revenues. And if you do have a problem with funding and valuations, you could also go for safe agreement. This is just an agreement of raising funds for a valuation that's going to be defined. So we speed up a little bit, so we have enough time to talk.
For this phase, I think it's as Y Combinator says, it's the MVP. It's not a product, it's a process, because at the end of the day, when you develop an MVP, you make some assumptions. Some of them might be wrong, so it's really important to try to identify them and also improve your product based on your customer feedback. So as Peach said before, pivoting is really part of this process.
Next, Venture Building Like a Pro will have a lot about different kind of pivots and why you do them, but 99% of the startups will change their initial idea anyway, so become used to that. Incorporation of the organization, we have partners, for example, Lexer, you could use to do that. Also, PISA plan, you don't need to go to a lawyer that does this the first time, so you can really go for standard approaches. Pitch decks, hire people who get things done. Also important, you don't need managers at the beginning. If the company is small, you need doers. And yeah, don't worry about the high prices or not earning enough money. The focus is just on getting customers who pay something. It doesn't matter how much they pay at this point of time. And referral programs can help as well. Experiment with growth hacking. And the last point,
the last points, I mean, if you reach this stage, congrats. And this stage, you should definitely reduce the pace, because at the end of the day, you have a running product and you want to focus on customer satisfaction. You want to focus on your own USPs, and at the end of the day, you might take some shortcuts during your journey. So it's important also to evaluate this technical depth and also understand on which integration you want to focus on your own.
Yeah, integration helps you to scale. Here we told you about the CAC and CLTVs. Keep your cost and quality in control. Look for profiles now who can scale and lead. So if you find guys joining you who already did perform a scaling phase or can start to build a small team, you don't need to have the CEO who run an organization with 1,000 guys, but if you have a good team lead who was operative enough for a venture, that helps a lot. And the last, growth hacking. I mean, in the end is growth. You need to find or decrypt the key how you can scale it. Keep an eye on customer satisfaction while adopting pricing, and build the MRR, so the monthly recurring revenue on ARR. It's also a journey here. It also takes time, so all in the right phases. Exactly, that's it. So I'm gladly to jump into a Q&A.
Amazing.
Questions?
Let's see, we have already in the chat one. While everyone else is writing in the chat, hopefully we can start with this one. Maybe you see it as well yourself.
Yeah, there is no next Power Week date so far. So currently we started with one Power Week that was done with Kinestic and ZKB. The Power Weeks we currently doing are customized to the needs of our users, where they engage us and then we perform them. The next we do with an insurance company, and we started last week, so we have ongoing versions of that.
How
applicable is to start to biotech and medtech. Biotech and medtech. That's a good question. Actually, the process time for medtech and biotech things is a little bit a different story. So you need to have more time to get the approvals also along the processes. There is a friendly venture builder. It's focused on biotech medtechs. It's called Evoline with Chris Google. They do a pretty well job, and I would suggest you might reach out to those guys, as they're really familiar with the specificality of that. Ha! We are not doing consulting. It's forbidden here. No, I used to do a lot of consulting before. Actually, it's really, it's not being motivated to charge more hours. And also the rates we are charging with the engagement model we have, that we also swap things into shares, completely different. So you're not charging consulting services, and it's really, if you know that a customer or a joint venture or whatever has only 50K, you cannot suggest to charge 20K for consulting services. So you need to really focus on what's bringing money in, what gets traction, and sometimes even not getting paid for it. That's really hard if you have skin in the game. So it's a different model than T&M. We also do T&M up in time. So whenever corporates are asking us, but not here. So when is this? The incorporation should come latest at the MVP phase. The question was, when is the stage for professionalized company operations, introduce structure, processes, SOPs? I mean, we always provide the foundations of file systems, set up processes, efficient at the beginning. So ISO 9001, so we craft that always the same system, and then this will evolve in parallel. But you would not really overdo it at the beginning.
Yeah, you won't have standard processes in the first 3 stages. What's the sweat equity investment? That's a good one.
You want to?
No, you can do.
Okay. Sweat equity is so-called Schwitzkapital. So you sweat for something to get equity. So that means, imagine you invoice normally 100, and now you invoice 50 in cash and 50 in sweat. And the 50 will convert to a valuation of the organization. So that means for the entrepreneur, they spend less in cash, but need to give a little bit away from that from the company. This is called sweat equity. how much attention do we have to pay to competitors, and at which stage does this come in? At the beginning, you already need to have an idea about competitors, especially when you analyze the problem, and of course also at the solution stage. But you need to be aware of the competitor. By the way, doing copy paste of another market is also a pretty nice growth hack to find something, because you will anyway have things. But also, if you do competitor slides, I mean, do them in a decent way, not just listing their competitors. Explain what they do different.
And why, if they're like direct competitors or indirect competitors.
Yes.
And just to maybe to quote a friend of us, actually, to have competitors is good, because if you don't have any competitors, the probability is that you don't have any markets. So it's good also to understand who are your competitors.
Nice. Yeah. What are typical problems and issues you've seen at the scaling stage? I mean, of course, it's really, if you want to scale, you should find out how you scale while keeping the quality and really get the traction that your ARRs or MRRs, the revenue is really increasing. That's a difficult task, to understand your cost, how they scale, and the revenue, how they scale. I mean, you need to find the way where revenue scale more than the cost. Right, and that's the main challenge. I have to leave, but thanks as well. How do you deal with founder complementary when building a company, sales, finance, tech? Igor, a question. How you deal with founder complementary when building a services? So how we complement those guys, or how they complement each other when they are a couple of people? Let's see until he writes back. There is another question. Scaling hiring in Switzerland is difficult. How do you support your partners in finding suitable people? This is an area of a company start to scaling is really, really difficult, and as well hiring too. The problem basically is that there is currently, due to many startups who are confronted with a lot of funding problems, more people on the market right now to find talents. But always having good talents is difficult. The probability that somebody who's talented goes to a big tech company and earns triple the amount they would earn in your startup is high. And on the other hand, there is the expectation you would provide them a third of the company because they join. I mean, that's completely crazy. And it's therefore super important to have an idea about how much you could give away in such a phantom share option plan with a cliff and a vesting period and a clear program that they can model their perspective and future into that model. And what we have a big network of people who are interested in joining startups. Of course, we're in contact with a lot, but also here we have maybe 80 applications, and then take one person for that job, because it's really hard also to find it on a chemical basis with the founding team that this works fine. How you solve the complementary problem if not all key functions covered in a team? Yeah, the good thing is we are like a chameleon, right? So we do have the capabilities in-house and complement it in a way that we can enrich the missing competences temporary until we then define somebody to recruit. And that's also an element in the venture building plan. We define who we need to support, because in the end, as a venture builder, you will always exit and hand over to the team. You mentioned many failure modes for startups. What's the key ingredient for success from what you have seen? We can boil that down to 3 things, I guess. Really having a problem, really having a team that gets along good, maybe with some experience on the entrepreneurial side, and then get shit done. The most problem of the people are not focusing the problem, talking too much, all the day, but not delivering something you can sell on the market. If you have entrepreneurial people, they get along together well, and you start really hustling, you do a lot of things in the right way. And there is one thing that's really critical. when a startup becomes super successful and has high valuations and suddenly hundreds, thousands and millions are flowing in, money kills character. That's really hard to handle in a startup when everybody was not getting high salaries, and then suddenly somebody wants to jump on a big salary or thinks he or she is the king or whatever it is. That's really, really difficult. It's complicated enough, this venture building thing, definitely. Any general criteria for selecting co-founders? Yeah.
That's a good one.
If you would marry that guy or girl, it's probably a good choice, but you need to be able to fight and also be able to have a lot of tough talks together and not being always on the same page. It's also okay if you can agree to disagree, but it's important that you can communicate with each other and have the same values.
At the end of the day, it's like having a relationship, because I mean, you have to overcome certain difficulties, and at the end of the day, you do this by communicating, you know, by respect each other. It's not something that you can, I mean, avoid. Conflicts are good. It's just a matter of how you solve them.
Absolutely. I will quickly jump as a last slide to our series. This series will continue. We now made the first one, Actionable Insights of 38 Ventures. The next one will have a strict focus on product. So we focus on how you validate in 50 days and launch MVP and generate revenues in 100 days, and how you pivot successfully. So what kind of pivots do exist? We are being accompanied by Dr. Stefan Meyer, our friend, CPO from Stefan, as well. Lucas and myself will be part of the party again. It will be very much related to product people, and I hope interesting as well. Any more questions, if you like?
Let's see. Otherwise, I recommend everyone connecting with the guys as well on LinkedIn, and so you can always send your questions to them like that as well. I know that both of them are very helpful like that, or maybe set up a meeting together with them. It's always a good idea. Let's see. Yes, thank you everyone for joining. I think that's it. I can see some people leaving. Lunch is over, so I guess people have to get back to work. That's rightfully so. For everyone who is still here, you can also sign up for the sessions on the Swiss Startup Association website. There you find both of the upcoming sessions. Great. Thank you very much to everyone.
Cool. Thank you for hosting us.
Sehr schön. Bye.
Thank you.
Danke.
Thank you all. Bye.
Thank you. Bye-bye.